All righty. Welcome to another episode of Remodelers on the Rise. Erik, if you ever wanted to see how the sausage gets made, that's how it gets made. For people that are tuning in, they're like, oh, he must have been prepping and like really getting his mind cleared. Or we were just talking and midstream I go, hey, we got to go live.
We're live.
That's more how it goes. I have Erik Jackson with Jackson Design Build and Kind Equity Partners. There might be a couple other businesses I could have thrown in there, but I put those two in there. And Erik is part of Remodelers community. If you are listening or watching this and you're not part of Remodelers community, if you go to remodelerscommunity.com, you can request to join. It's a free Facebook group that's really rock solid. And I've seen his name pop up there a little bit. I've seen his name just from being in the industry. And in particular, Erik made a little video related to a post I made a few months ago. And I said, hey, you should be on the Remodelers on the Rise show, and we should unpack that. What we're going to talk about today is how to get creative on building financial value and net worth. So, Erik, thanks for joining today.
Yeah, thanks for having me.
You betcha. Should people join that Remodelers community thing?
Absolutely. It's an incredible community. I'm a big believer in we learn from each other. I mean, you think about how we got started in the trades. Most of us, we didn't go to school. We learned from an old seasoned hand on the job site. And that's what the Remodelers community for me is all about.
Yep.
It's guys like you and Jeff Forward that are really sharing with one another.
Yeah. Just bald guys unite.
Yeah.
Bald guys unite, because Jeff and I have that as well. The way I want to add a couple more cents to this before we get into some of the details is, when we think about little progressions in your business, we go from, being okay at what we do as far as the actual production and delivering for a client to being really solid there where we're delivering a great finished product. And then a lot of times we start taking the financial and the business side more seriously. And we want to be just as good at the business side of remodeling as we are on the actual doing and the production and the finished product of it. And what we're kind of talking about today is when you've got the work going, when you have the business side going, how do we start to optimize things so that we are excellent at the building of wealth and the building of some legacy? How do we optimize our business that way? So it's something that Erik is super passionate about. I've got a few pages of things that we're going to go through here that Erik has prepped. I said, hey, we're not going to be able to get into it all, but let's get into it quite a bit. And I kind of want to jump, actually, Erik, if you're cool with it, to this one of just you need a clear, smart vision of where you want to go in life. Before I do that, though, give people a little bit more of an introduction on who you are and where you're coming from.
Sure, absolutely. It's important to say that I started investing when I was 14 years old. My best grades in school were science and math. And so coming out of high school, I thought, hey, I'm going to be an engineer. Well, I picked an engineering school where there was the drinking was legal. And physics and I did not get along. So I came back to Seattle and I realized that I really enjoyed investing. So I got a job at a brokerage firm, put myself through school that way, and actually spent a decade working on Wall Street. But ultimately I got burned out. I didn't like selling stuff. And my brother was working with his hands for a remodeling company in Park City. And I went and I worked with him. And ultimately we ended up in Seattle and we were working for the same remodeling company. At this point, I think I was a third year carpenter, and FEMA came into the Seattle area and they started educating contractors about earthquake retrofitting. And I realized I had already done a couple of retrofits for my current employer. I put together a business plan to actually take it to them so that they could set up a division. Got looking at this plan and realized, here I am, I'm making $13 an hour, and retrofitters, they're billing out at $50 an hour. I'm going to go start my own business. And went to my brother and told him, hey, I'm leaving. He's like, no, wait. Let me take a look at it. So he took the class. We ended up doing remodeling and earthquake retrofitting. And early on in our third year of business, we joined a peer group, much like the Remodelers community.
Yeah.
Was it
Remodelers Advantage?
Remodelers Advantage.
Yeah, sure.
Yep. Fantastic group.
Yep.
And I remember sitting in my first meeting, and everybody around the table, they were 15-year, 20-year-old veterans of the industry. And all these guys are like, wait, you started your business when? 3 years ago? Oh, I wish I had learned that early on in my career. And what we learned from Victoria and Linda Case is we really need to optimize these systems. And just like we're incredible carpenters providing a wonderful product to our clients, we've got to do the same with the finances of the business. And so we took that and we ran with it.
Gotcha. And give people a kind of a clue of like where your business is right now. So I think it's interesting that we're going to talk about, the financial value and net worth and building that up and ways to get creative on that side. But you're still owning and operating design build business. Sounds like you got good number of employees. Maybe describe for everybody kind of what you have going on that front.
Sure. We run 2 construction companies. The design build remodeling company, we do about $3.5 million in revenue. We've got 5 in the field, 5 in the office, 8 in the field. The retrofitting company, we do over $1 million. We've got 3 in the office and 4 in the field. And, as we win awards and we get acknowledgement for an incredible product that we're putting together, we keep shrinking our geographic focus because we really want to hone in on one small corner of Seattle. And what I've been telling my team forever is we're not going to go chase the big stuff. We know what we're really good at. We're just going to wait for the right clients that are willing to pay our prices so that we can just make them raving fans.
Excellent. So we're going to share some ideas for remodelers who are watching this live or remodelers who are listening to the recording. And where we're going to start is something you had written to me of you need a clear, smart vision of where you want to go in life. Let's unpack that a little bit.
All right. So all of the stuff that I'm going to be sharing about just creating a wonderful financial life, it all comes from my experience in remodeling. And so, imagine going out to your client's home and they ask, hey, Erik, I want a really cool space outside where I can entertain family. What are you going to build for them? If that's all the information you have, what are you going to build for them? Are you going to put a slab in there? Is it a deck? Is it pressure treated wood? Is it, is there an outdoor kitchen? When we ask each other about what do we want in our futures, a lot of times we just get these answers of, well, I want a good life. I want to be able to travel. There's no detail there. There's nothing that you can build on
and plan for and budget for, all of that.
None of that. Yeah. So just like we wouldn't accept that from our clients in, hey, just create a really nice space outdoors for me, we shouldn't accept it from ourselves. And so really think about, do you want to live the existing life that you're living? Do you want it better? Do you want a second home? If you want to travel, where do you want to travel? Actually look at how much those travels are going to cost. How much do you want to put away for your kids' college educations?
Plan it. It's almost like a design build approach, right? If I'm going to build,
absolutely is.
Yeah. If I'm going to build this thing up, I need to design it first. So this is interesting, people. We're talking about how to build a strong financial future, and where is Erik taking us first? Let's get a little bit of a vision of what we're trying to do and what we're trying to accomplish. Because when we're able to do that, we can start to put some time frames on it. We can start to put some expectations. We can be getting excited about it. We can start to attach some numbers to it, and it becomes a lot more real. If you don't do that, what are you just going to accidentally drop into, a wonderful, safe, secure retirement by chance? No. We need to design this and make sure that we know what it's going to take in order to do this. And if you just keep putting it off and putting it off and putting it off, all of a sudden you're going to look up and be like, wow, I wish I would have done that 10 years ago.
Yeah.
So that's where you're taking us first here.
And a great spot to start is with a dream board. Actually sit down with your family, cut out pictures of all the things that you want to do in life. Talk with your kids, we've done it several times with my children. They're 12 and 14, and they really enjoy, hey, we want to go back to Hawaii. We go to Hawaii twice a year. We want to go to Europe. We want to go to the Lego tours. Perfect. Get all that out there. That's going to make it really clear the vision that you're heading for.
So vision boards aren't hokey, Erik?
Not at all.
Okay.
If I was out in my garage, I'd grab my vision boards. And my very first one that I did when I went through Sandler sales training, I got everything on my board.
Okay. And you mentioned Legos. It looks like you've got quite the Lego setup in the background there.
I have a Lego addiction.
Okay. All right. So you don't like Legos. You are addicted to them.
We're absolutely addicted.
Okay. Okay. Fair enough. All right. So that's number one. You need a clear, smart vision of where you want to go in life. Next up, you're kind of making this analogy between remodeling business and what we're talking about here.
Yep.
We build budgets for our jobs and our business. Why can't we build budgets for our future?
Yeah. So just like now we figured out for your client, hey, they want a deck, they want it covered. Here in Seattle, it drizzles 9 months out of the year. So we know what that space is going to be. And now let's actually put numbers to it. We're asking questions of our clients. What's a reasonable amount to spend on this? We need to look at the same of, what can we afford? Those trips to Europe, how much are they going to cost? That second home, what is that going to run? Taking care of mom and dad as they get older. We really can. Once you've created all the things that you want to do in life, then you can start, in today's dollars, you can start to put numbers to each of those things. And it doesn't have to be exact. It just has to be a plug number, at least to start.
And the plan is going to shift as we go along. But again, it's kind of putting that intention out there and that plan together, creating that plan, attaching some numbers to it.
Yeah, it's much like when we do the estimating or setting expectations with our clients. Hey, Erik, what's the second floor cost? Or, first, what kind of space do you need? Second floors in our market, they're $700,000-$800,000 and up. We've got that. Then we're going to start to look at, are we putting a principal bath in? Is it a second? We'll keep coming back to all of these things we're talking about today and just continually refine them.
I like it. Okay. So those two are effective, but fairly straightforward.
Yep.
So we're going to keep cruising. Now, the next thing you say is, look, if you have that, if you've attached it, we need to look at our engines of cash flow, our businesses, etc. Talk about that a little bit.
And I have to give full credit to Linda Case and Victoria Downing for this. We sat in that first meeting, and 3 years in business, I had 90 grand in the bank. I went and I bought a dump truck.
Ooh.
Turns out we learned about work in progress billing in that meeting, and I actually owed 120. So we had spent client deposits on this dump truck. And so shortly after the meeting, here I am, I'm trying to sell that silly dump truck. But what RA taught us is these companies, they're incredible engines for growth. You can have a 2-stroke, you can have an 8-cylinder, or you can have a jet engine. Our first facilitator, he was a fighter pilot. And I really latched on to the idea on, wait, how much money can you make? I thought it was just a good living, a good wage, but no, you can actually live an incredibly abundant life. And once we had that epiphany, we leaned into the systems and went full bore on how can we get our gross profit to 40%? How can we get it higher? How can we minimize overhead to have all that drop to the bottom line?
So, those are things that anybody listening to this, if they've been following my content, other content, have been hearing for a long time. Paying attention to your gross profit percentage, lowering your overhead percentage, increasing your net profit. You were mentioning to me, you had a 10 and 10 thing in your head, but you guys had 2 owners. So you ended up going 10 and 10 and 10. Tell everybody what that means.
Remodelers Advantage shares the owner compensation. You ought to have a salary of about 10% of the revenue. So using current dollars, $3.5 million in revenue, that's owner salary of $350,000. And then you need to be making 10% net income, $350,000. And we learned, well, we've got 2 owners. We don't want to take that 10% owner's compensation and split it and only get 5. So we leaned in and we did 10 and 10 and 10. 10% of revenue for owner A compensation, 10 for owner B, and then 10 in net income. And we built the systems to generate that kind of net income.
That's good. So what we're talking about here is if we're going to really build wealth, if your business is a 2-stroke engine and it's kicking off $75,000 of owner compensation and then another $50,000 in net profit, then it's getting the job done perhaps, but it's not helping you too much. What does it continue to look like to make our business an engine of cash flow, to really be kicking off best in industry? And it takes time, right? You weren't at 10 and 10 and 10 overnight. It was piece by piece, system by system, process by process, job cost by job cost of improving it. But what you're really highlighting here is, let's get clear with the vision. Let's get clear with a budget for that vision. Let's optimize our business so it's really producing solid cash flow.
Yeah. And
it's very clear so far, Erik.
Well, thank you. Too many people, when they think about, hey, I want to generate, a big net worth, they think about going outside of their business. Hey, I'm going to start flipping houses. I'm going to have a side gig. I'm going to do all these other things. No, please don't. You've got an incredible thing in front of you that if you help it grow and provide a great product for clients, it's going to reward you amply. You've already got it. You don't need to go learn something else.
I've thought about that a lot before. There's several different little businesses that I'm like, ooh, that might be interesting. Ooh, that might be interesting. And then I think about the amount of time, effort, and hours and money that it's going to require to get it up and running. And I apply that amount of time and effort to my existing business. And I quickly realize pouring more into my existing business, optimizing that more, making it more profitable is going to outperform anything else. Now, once you get it really cooking, perhaps you look. Now, there might be a time where you just are really excited about something and you pursue it. But what you're emphasizing there is patience. Don't think there's just better, it's greener over there. And, this is your problem, is you need to figure out something new to add to it. Optimize this thing that you have been working your butt off and really get it producing on a jet stream. What do you call it? A private jet
engine.
Jet engine of cash flow.
Now it would probably be a Blue Origin,
heading
spaceship.
to wherever. Okay, good.
Yeah.
We're going to keep cruising. I'm going to keep us ticking along here. Nest egg versus growing portfolio. Do a little teaching on that.
All right. When everybody thinks about retirement, most of what we've learned is, hey, I got to save. I got to get this certain amount of money. I've got to protect it. That's my nest egg. And then when I get to retirement, I'm going to start slicing little pieces of that money off. And oftentimes people talk about, hey, I can take 4% of the principal off. And so if you were looking at a graph that's given to you by a financial advisor, there's time along the bottom, there's dollars, and you get to this certain point, and then over time that money it dwindles to nothing. I had lunch with a remodeler here in town recently, and he shared his financial plan, and to get to where they wanted to be, he needed $7 million. And I said, great, and when you die, what does that look like? We're going to have $1.5 million left. Well, that's assuming that he dies at 90, that he's not.
This doesn't happen.
Yeah. And instead of that, because we're already optimizing our businesses, when we start to take that same approach of problem solving to looking at growing our net worth, there's an opportunity where we can get to the point that our assets are actually giving us enough to live an abundant life, and that they're going to continue to grow in value.
Okay.
Go ahead.
Yeah, so we're going to have to unpack the strategy behind that. But I think that concept of just nest egg versus growing portfolio, we'll get into that a little bit more. It might be in part 2 of this, maybe not today. Buckets, aka basic asset allocation.
Yep.
Talk about that.
We need a certain amount, because we're running businesses and we've got economic cycles. We need a certain amount of money that's set aside that is just in case. Sometimes if you've got a salary job, they call it the FU money, the walkaway money. As business owners, we need a bigger bucket, a security bucket, or oh my gosh, what happens if remodeling stops for 2 months in the beginning of 2020? And for most business owners, we don't need just what the salaried people need. We need more than that, because I don't know about you, Kyle, but I've got a complex life. I've got an addiction I've got to pay for.
What, the Legos?
So, just a few. And so we need that money, that security bucket that's sitting off to the side. It can also be an opportunity fund as well, where if we know that we've got a certain amount of money coming in from the business and going into our different buckets each quarter or each year, that we can take some of that security and we can use it for opportunities. But that's the first bucket, security bucket. Second bucket is, it's our growth bucket. Don't be thinking about the money as, hey, I'm just saving it for retiring, squirreling away. It's, no, how do we get that? How do we get that to grow? How can we optimize that growth bucket? And in that growth bucket, there could be retirement accounts, regular IRAs, Roths. There could be health savings accounts, regular taxable accounts. There's that taxable bucket or that growth bucket is huge.
And multifaceted.
Yeah. And then depending on where you want to go in life, are you looking to put money aside for your kids, helping them with college or helping parents? So there can be all kinds of legacy buckets as well, or a giving bucket.
Okay, good. So thinking through all of that, and let's sit in the growth bucket for a second. Yep. If I'm a remodeler who isn't saving much for retirement yet, isn't kind of moving in that direction yet, there's also a lot of people who, when I say, what kind of retirement account do you have set up? I'm not really sure. What comes to your mind for that, and for some first steps they should be taking?
First steps is, I might actually go back to, you need a security bucket. You just need to be putting something aside. And so, with that budget, picking some number. Is it 10% of what's coming in, and just push it aside? Mike Michalowicz has a great book on, how to set up an accounting system where just 10% goes off into
straight up
your
profit first.
Yeah.
Yep.
And go ahead and give yourself the 10% profit. And then of that, let's put some of that money into one of these buckets, the security bucket. When you look at what the growth bucket is, it depends on where you're at in life, how much you've got in the security bucket. But there's many of these accounts where it can just be a taxable mutual fund. Schwab or TD Ameritrade, they're going to be able to set you up an account. Vanguard, that has literally no fees. And if you need it, you can pull it out. Got
it. So where I want to go with this next, and kind of going a little off maybe the format that we were looking at, is getting into some of the more creative ideas to get people thinking. But what I've liked about what we've talked about so far, it hasn't been, we're not talking about super crazy creative things. What we're talking about here is good fundamentals when it comes to your financials. Have you heard what we've said so far of creating a very clear plan of what your vision of your future looks like, of getting very clear with tying some numbers and attaching that to it, of realizing before we talk about the advantages and disadvantages of Roth versus this, of investing in real estate, of the Augusta Rule, of this or that, before you get all excited about all of that, are you optimizing your business for it to be a real engine of cash flow? Because then it can be really fun to start talking about what we're putting in. This nest egg versus growing. And then what you just talked about is make sure that you're proactively organizing how you are putting and organizing your assets. What different buckets are you trying to fund? Again, very foundational, practical, important things for us to be thinking about. We're not going to just sit back and throw some money at a retirement account and then just hope it's fine. There's a lot more that Erik's leading us to here of getting everything organized and strategic and getting the fundamentals down. Fair enough? Yeah. Recap so far?
Okay. Absolutely. And with these buckets, leave yourself options. So the names that I've chosen, TD Ameritrade, Schwab, Fidelity, any of those, the money can go in, but then you can easily transfer that money out. And so when you start to get more educated about some of the more exciting investment opportunities, you can pull that money from Schwab or Fidelity, put it into an IRA custodian that allows you to invest in the non-traditional assets.
Okay. So that's where I want to go next. I want to hear some of your ideas related to people. Are you a real estate professional status? Are you an S corp? Are you this? Are you that? Let's go through 5, 6, 7 different examples of some of the things that you're doing, some of the things that you advise others to do when it comes to kind of getting a little bit more creative of knocking down your taxable income, etc. So where do you want to go with that?
Oh my word. This is my passion. So once you've got a fairly clear plan of what you need to do.
Hang on one second though.
Sure.
Isn't it interesting that now you're going to light up like a Christmas tree, and you have already been very passionate, and we're going to talk about that. But I'm glad we didn't skip the stuff we've already covered. The stuff that we already, all of this stuff is very important, but the stuff that we covered is the stuff that you guys need to take more seriously. All right, now hit us.
This is the benefit. This is the frosting for dealing with these incredible remodelers that we're putting together and educating our contractors. Finally, now it's like, now we get to go off and use that. So once we've got a rough plan, now we need to engage our accountant. You need a fantastic accountant that is actually going to work with you to answer questions and help guide you in the direction that you may need to lean into next. For instance, all of us remodelers, we should know what a real estate professional status is. Ask your accountant, am I a real estate professional? If you are, there are some incredible tax benefits that came from the tax changes in 2017. The previous administration, he was the developer. He loved real estate. He put in some wonderful things for us. If your accountant doesn't know what a real estate professional status is, or says you're not, I might suggest find a new accountant.
And give the punchline of maybe one of the benefits of that designation, how you could use it to your advantage.
Real estate professionals, you can take losses, passive losses in real estate, and you can apply it to your current income. And with some of these investments that we're probably going to end up talking about in part 2, say if you've got a $400,000 adjusted gross income this year, and you don't want to pay that much in taxes, and you've got $200,000 that you can put into one of these buckets, the growth bucket, you can actually take that $200,000, you can invest it in a real estate syndication. You can get what's known as accelerated depreciation through a cost segregation study and get a taxable loss in year 1 of $100,000 to $200,000. So instead of paying taxes on $400,000, you've invested money in your growth bucket, and now you're only paying taxes on $200,000. And so then you're able to take those tax savings and invest those as well.
Right. Saving 60, 70 grand in taxes. But we just got real sophisticated real quick, which is good. Yeah. Right. But the punchline you've said so far is your accountant actually solid, good, creative, honest, but creative? Ask them about real estate professional status. What's another area that kind of would pique people's interest?
Well, if you're starting with your accountant and you're having regular communication with them, hopefully you're not going to get to the end of the year and realize in December, oh crap, I made $400,000. What should I do? Well, I'm going to go buy another truck. I mean, just like I bought that dump truck, how many people have gone and purchased a depreciating asset that they really didn't need just because they didn't want to pay the taxes on it? You know, taxes are historically pretty low right now. So if you have to pay taxes, it's not a bad idea to pay the taxes and then invest. But another idea is many of us were subchapter S, and our accountant should be using the 199A rules, where of that $400,000, let me actually go back. Ask your accountant where you should set your salary. If you're doing $3.5 million, do I want to set my salary at 10% of that, $350,000? The answer is no, you don't. Because in the current tax environment, I don't want to pay tax on that 350. If I take a smaller amount in salary, I can actually get the rest in distributions, and I only pay tax on 80% of the distributions. So there's optimizing your salary. It's a great discussion we have every year with our accountant on what's a reasonable salary that I should be taking.
Yep.
There's the minimum, there's to meet the Social Security number, and then if you've got advanced savings plans, there's another number that's above that.
So that's another strategy. I like that one. That one's again pretty straightforward. Most people listening to this are an S corp.
Yep.
I have found as I'm talking to clients, though, a lot of people, when I say, have you talked to your accountant about the salary? Should it be going up? Should it be going down? Where are you at with that? Well, we haven't really talked about it too much, or he didn't really ask about that, or he went through it really quickly and I didn't really understand it. One thing that you're emphasizing here is, while you don't necessarily need to understand how to file your taxes, you sure better know and understand why you're doing the things that you're doing, what other possibilities you have to optimize your savings, optimize your investments, reduce your taxable liabilities, etc. So you got to dig into that.
Just like with our remodelers, we don't need to be an expert in plumbing or electrical or photovoltaic, but we need to understand the basics of it so that we can figure out how it works in the system as a whole.
I like it. What are some other pre-tax things or other things that are high on your list of things that remodelers should be thinking about?
One of my favorites that's pretty easy to execute if you're giving benefits to your team members, take a look at your medical plan. If you've got what's known as a high deductible medical plan, and the deductible does not have to be that high to qualify. If it's a high deductible medical plan, you're able to set up what's known as a health savings account, an HSA for short. And this is a fantastic way for families. You can put away close to $8,000, save the taxes on that $8,000. It grows tax-free. And then when the money comes out, it comes out tax-free as well. And so you can use it you can put it in just to a Schwab or a TD Ameritrade type account, or you can actually use it and invest in longer term assets. But even if you're just going to pay, for instance, your kids' braces this year, you can set up an HSA, put the money in, you get the deduction right off your taxes. So that's money then that you can invest in some of these other buckets. And then you can pull that money out next month and pay for your kids' braces.
No brainer if you know about it and you're sophisticated and you're okay, good. You've got about 10 more. Keep going.
Oh my word. The Augusta Rule. This is one, everybody calls it a little different thing. I forget what the section of the IRS code is, but the IRS allows you that if you have real estate, that you can rent that out for up to 14 days per year and not have to pay, not declare that money as income. And so for remodelers, are you doing any team building? Do you have a holiday party? Can you do quarterly retreats where you're actually bringing the team together? You can rent your home out to the company. Go and find out what a home's going to rent for on Airbnb or VRBO, and take that money out of the company and put it into your pocket tax-free.
Yeah, and the Augusta Rule is based on, for us golfers out there, the Masters is in Augusta, Georgia, and it is can we call it a loophole in in the tax code? It's kind of something that was really set up for that is applicable across the board.
They call it the Augusta Rule because the senator who was really pushing it, he had everybody around the U.S. Open that wanted to rent their home out and make a ton of money for 2 weeks out of the year.
Interesting. So that one's a pretty creative one. There's some others that'll lead you towards of,
Sure.
You said, can the kids work in the company? Can your spouse work in the company? What about a director's meeting and family vacations and combining that? What are some things people could think about there?
These are all things. Now, I should have given the disclaimer earlier. I'm just a business person and sharing my experience with how we're integrating these different practices into our financial planning. So I'm not a lawyer, I'm not an accountant, I'm not a financial advisor. Talk to your accountant. But
neither am I, in case I'm liable on this. I'm just asking questions, but no, I'm none of those things either. Go ahead.
If you go to kindequitypartners.com, you're going to see some pictures of some adorable little kids. Turn out that they're my kids, but who knew that they drove such a hard bargain on their modeling fees? They make $6,500 a year each.
Wow.
So that's money that company is paying them, and they're not paying any tax on. And then they're able to put that money, because it's earned income, they're able to put that money into Roth IRAs at 12 and 14 years old. And that goes back to the buckets. That goes back to, it's actually the beginning. It's the plan. What do you want to, how do you want to help the people in your life? If you've got this set up knowing, hey, I want to help my kids now, great. Let's set up these Roth accounts. Let's set up these college savings account and actually engage them in the conversation, teach them about it. Those Roths are going to be worth $1 million.
For sure. When you said 6,500, I thought, well, it's an interesting bargain that they did, and it just so happens to be the maximum amount that they can put into a Roth IRA.
Oddly enough.
Oddly enough.
And then same thing with your spouse. That if your spouse isn't in the business, can you pay them a director's fee as well? If you're married filing jointly, you may not save money there, but that allows them, because they have that earned income, that they could actually put the money into a traditional IRA. And then because your spouse now is a director, you can have directors meetings. You could go to your home or your cabin and actually have the directors meeting there, or you could choose to have your directors meeting in Orlando.
And go see Mickey Mouse after the directors meeting.
And there's some complicated nuances to the rules. You have to spend at least 4 hours a day on business, but then they don't count the weekends. And so, you show up Friday, you have a director's meeting, you decide, hey, we're going to take some time and think about the initiatives that we're going to do next year. You have the weekend off with the kids at Disneyland, and then you come back and wrap up your director's meeting on Monday.
Yeah. And what I'm hearing there is, I understand the rules, and I've read the rules, and I understand how to use this appropriately and not illegally or anything like that, but to use some of these to my advantage. I think, the sophistication that we just got into, whether it be the real estate professional status, the S Corp, all of these different things that we're kind of talking about, is that type of sophistication is what allows you to take the precious dollars that you are making from your business and optimize them well. Nobody wants to pay another $6,000 in taxes when it's not wise to do that. Nobody wants to, not take a deduction that is quite legitimate if we're sophisticated enough to understand it, or for our accountant to bring it up and to lead us through to it. We're talking about just how do we build and protect that wealth, and you're hopefully inspiring some people to be thinking of some more sophisticated options to look at. At the very least, there's too many people listening to this that don't clearly understand the difference between a regular 401k and a Roth 401k. Don't understand the difference between, having a Roth IRA and getting that stinking thing maxed because you're 28 years old or 32 years old or 34 years old, and you realize that $6,500 you put in there is going to save you tens of thousands of dollars upon retirement. The fact that you might be wise. I think this was the original post that I made that you commented on. It may be wise not to take the tax deduction in a regular 401k this year, and set up your 401k as a Roth and pay the taxes now, because in 30 plus years, the amount of savings you're going to have on your taxes when you take that out is going to be substantially more than the tax savings you have now. Sophistication, being a little bit more knowledgeable so that you can build wealth wisely and optimize, again, the precious dollars that you're producing from your hard work in your business.
Yeah. And that sophistication, it comes over time.
Yeah.
We're incredible problem solvers on our job sites. We don't need to understand the plumbing, the electrical, any of that, but we do need to just ask these questions, identify the issue. Crap, the toilet flanges in that bay and it needs to be in that bay. What do we need to do? Asking just like we're asking the plumber with the the toilet flange, ask the accountant, how do I get that? How do I move that? Is that a reasonable thing to think about?
I was thinking, when you sent over a bunch of lists the other day, I thought to myself, you know what, I need to, my boy, John Dawson, who's been my CPA for years, I thought to myself, I need to ask him just some of these things that I hadn't really thought about. There's a few of them in there. And I immediately almost sent him an email, and I thought, Kyle, stop it. This is literally his busiest time of the year. This is a wonderful thing to talk to my accountant on in July, in June, in August. 80% for a lot of us, 80-90% of the amount of time we spend with our accountants is during their busiest time of the year. Schedule something in August, schedule something when they're not super packed, so that they have some time to really strategically think about these things and coach you and teach you about these things. Good.
Yeah, the best time to choose a toilet is not when the plumber is standing there asking, what do you want me to install?
Bingo. Boy, there's a lot of analogies between remodeling and finance. I like it.
It's really straightforward.
I like it. So every time I start one of these Remodelers on the Rise show, we got a little bit of a hunch of the direction it's going. This one, started and went into a direction of just very solid fundamentals, clarity that people need to be thinking about. And the last part here got into some of the more sophisticated, interesting, I've never heard of that. I should Google that. I should look into that, items. And I think there's more related to that, and there's more depth to a couple of these that you and I are going to reconvene for a future episode of Remodelers on the Rise, so that we can unpack it a little bit further. But I think we delivered some solid value to people. I appreciate your time. I'd like to end by you kind of saying, hey, people, if you heard nothing else from what Kyle and I talked about today, I want to make sure you heard this. What would that thing be for you?
It would be, we're already problem solvers. We can take that same ability and we can start to map out an incredible financial future. And, to do that, my team prepared a couple of gifts if folks are interested. We've got an incredible book list of just places with information. You can just read the synopsis of the book and learn, where can I, outside of the Remodelers community, where else can I learn about this, and dive just a little bit deeper. And then we also created just a quick action plan for the next steps, the questions to ask your accountant, so you didn't have to take notes during this meeting.
Even better. So I just put on the screen there, they could probably email you, or they can go to this website. Would that be two best ways?
We've actually got it. It's on, if you go to kindequitypartners.com /ROTR for Remodelers on the Rise.
We're going to find it right there. kindequitypartners.com /ROTR.
Yeah.
Talk about sophistication. Bada bing, bada boom. Cool.
Teamwork makes the dream work.
I like it. Excellent. So I appreciate your time, Erik. We'll call that a wrap for today, and we'll be talking again in the future. Thank you, everybody who listened in, and take some action on it. Yes, go to kindequitypartners.com /ROTR and grab some of those resources. And also, just if you heard something today that you're like, I need to dig into that further, take some action on it. You're not listening to this just so you can be filled with more and more ideas that you don't do anything with. You're listening to this to hear something that inspires you to take some action. Focus in on that, take some action, and keep improving. Thanks a lot, Erik.
I'd love people to drop a comment down below the video on what's the next step that they're going to take.
I'd love that too. Excellent. Thank you, sir.
Thanks. Have a great day.